Hey, welcome back to YT Finance, and today we are talking about Senseonics SENS stock and why you need to know the date of August 31st, 2021 if you hold SENS stock. First, I will report on the pros and cons of holding SENS stock, then we will discuss how much of the diabetes market Senseonics can capture, which should lift their stock price, and then lastly, we will discuss the urgent news of why investors are selling their SENS shares before August 31st. I will then tell you what I think of the news that could bring Senseonics stock down to $1 or lower. Go and press the like button right now for more stock news updates. Comment your thoughts down below, subscribe and turn on subscription notifications if you are new, and now let's make you some free money with Webull. Webull is a free brokerage app where you can buy and sell stocks, options, and cryptocurrencies. But right now, you can get 2 free stocks with Webull. You can get the first free stock, which can be worth anywhere from $2 to $250 for just creating an account. And you can get a second free stock, which can be worth up to $1,600 if you invest $100 or more on your first deposit. You will have a 1 in 100 chance of getting stocks like Facebook, Starbucks, or Snapchat, and you have a 1 in 50 chance of getting stocks like Google or Procter & Gamble. To get this offer, just press on the link in my description box down below, but do it quickly because this offer will not last forever. And without further ado, let's get into today's stories. If you didn't already know, Senseonics has created the Sense continuous glucose monitoring system for people with diabetes, which grants patients extreme convenience. Currently, Senseonics has their 90-day system and a 180-day system, which is currently being reviewed by the FDA, and upon approval of the 180-day system, another 365-day CGM system will undergo testing. These systems are hyper-convenient because they are inserted under the skin so they can consistently and constantly monitor the patient's glucose levels, and then the health data is then transferred and sent directly to their phone via an app. Once the FDA approves the use of their 180-day system, which I think they will, the SENS stock price is projected to initially skyrocket based off of this great catalyst. CGM systems in general provide freedom and improves the mental health of patients while also protecting their physical health. Senseonics Eversense system also has unique advantages over their competitors because of their accuracy and the duration of their systems, which also provides vibration alerts in certain situations. The SENS stock price also carries a very high short interest, with around 20% of their float being shorted, which provides a great opportunity for a short squeeze to happen if we get a large enough catalyst. The cons of Senseonics Eversense CGM system is that some of its competitors are approved for insulin dosing, such as Abbott Laboratories Freestyle Libre, ticker symbol ABT, which provides a slight advantage over Senseonics Eversense system in that regard. However, in my next video, I will be doing a full breakdown of Senseonics technology versus their competition to see which company offers the best products, so like this video right now and subscribe if you are new so you can see that comparison. Lastly, even if the stock does short squeeze, which is a very high probability, the short ratio is only around 1.63, which means that the shorts can cover their positions in less than 2 days, so the short squeeze will be short-lived. Now here is why some investors are selling SENS stock and why the date of August 31st is so important. On page 19 of Senseonics' last proxy statement, we see that PHC Holding owns 68.3 million SENS shares, which equates to 13.8% ownership. To put that into perspective, the next two largest holders only have 6.8% and 6.3% ownership respectively. Even the CEO and insiders only own 5.6% of the company, so PHC is a dominant shareholder. PHC is a Japanese-based company which is a manufacturer of healthcare devices in a variety of spaces, including diabetes management. The reason why PHC is important is because Essentia Diabetes Care Holdings is one of PHC's subsidiaries, which controls 20% of the global diabetes market, who also holds the rights to Senseonics Eversense system to distribute it across the world. Well, this is all good news until we look into Essentia's and Senseonics agreement, which says if Senseonics Eversense XL 180-day system is not approved to be used in the United States by August 31st, the agreement is open for termination. If the agreement is terminated, it's not going to be Senseonics' fault because the FDA approval was pushed back due to the pandemic. However, the CEO of Senseonics still remains confident in Essentia not terminating the agreement because he says this, and I quote, As we await hearing from the US and European regulatory agencies concerning our pre-market submissions of data from both the primary and the SBA sensors, we are pleased to continue to offer the Eversense CGM systems in both the US and Europe with our commercialization partner Essentia Diabetes Care. However, the reason why Essentia might terminate the agreement is because 1. The agreement will be breached because Senseonics cannot hold up their end of the bargain by getting approval by August 31st. Reason number 2, Essentia needs to be making money off of Senseonics' new system right now, so Senseonics is more of a liability for them. Reason number 3, this provides Essentia a great opportunity to terminate this agreement and potentially reestablish it later on when Senseonics is FDA approved for their 180-day system, or even their 360 to 365-day system. Without Essentia and PHC, who is the dominant holder of Senseonics that we talked about earlier, the SENS stock price will find itself in very risky deep waters. Without PHC and Essentia, SENS will have a very difficult, if not impossible, time competing in the global market compared to their competitors. The financial reporter of this article says that if he was given $10,000, he would only put 1/4 or $2,500 on Senseonics stock and then wait for FDA approval regarding their 180-day system. And I respect this answer. It would be smart to wait for confirmation or even wait until after August 31st to see how people react to the SENS stock price to see what happens with PHC and Essentia. We should also keep in mind that Essentia has loaned Senseonics $35 million worth of senior secured convertible notes at a 9.5% rate annually. And if Senseonics gets FDA approval for the 180-day system, that rate will drop by 150 basis points to 8%. I can understand why people are freaking out, but I think their fears are slightly overblown. Now, it is good to understand the risk here, but again, I am not convinced that PHC or Essentia will drop Senseonics over a late FDA approval because of the pandemic. Now, don't get me wrong, it is definitely possible and plausible that PHC does cut ties with SENS, which is why I am telling you all the risks here, but again, I am not convinced. SENS stock is still rated as an A stock, and although in my prediction August 31st will come and go without FDA approval and PHC could send the SENS stock price below $1, it really makes no sense to me why they would do that over a simple late approval. Now, you can play this in multiple ways, but my favorite is to simply hold. Don't buy anymore, just hold through August 31st to see what happens, or you could continue to add shares and wait for a short squeeze, or you can lessen your exposure to Senseonics stock down to 5% of your portfolio for risk management. For me, I'll continue to trade off of the volatility because it has a very high beta ratio. But what do y'all think? Comment your thoughts down below, like this video right now, subscribe if you are new, and I'll see all of you in the next YT video.